Okay, section 3.5 is on credit cards. We worked on the project a little bit today in searching for the credit card that's best for us, but a little information more behind the scenes for credit cards. This is just, as you know, a plastic card for purchasing and paying later. Impulse buying, this is where consumers purchase something in which they are suddenly attracted to and have no intention of buying. Revolving charge account, this is a credit card in which the entire bill does not have to be paid at the end of each month. You usually have a minimum payment due and then finance charges. We have a charge card. This is a special card in which the complete balance must be paid off in full at the end of the billing cycle. The Truth in Lending Act, this protects you if your card is lost or stolen. Your typical max liability is $50. Fair Credit Billing Act, this protects you from errors on monthly statements. Fair Debt Collection Practices, this prohibits creditors from harassing you to collect the amounts owed. A debit card, this is an electronic check basically where you can go to a store, use your debit card, and it comes directly out of your bank account. Electronic Funds Transfer Act, this protects from unauthorized uses of cards. And you have an average daily balance on your credit card statement, which we'll talk a little bit later. This is the average amount owed each day of your billing cycle, and it's constantly changing because it's based on money coming in and out of your account. If you need to pause for definitions, please do so. Problem number 1. Janine's credit card was stolen and the thief charged $44 meal before she reported it stolen. How much of this is Janine's responsibility for paying? She'd have to pay the full $44 because there's a $50 liability maximum. Number 2, Felix and Oscar apply for the same credit card from the same bank. The bank checked both of their FICO scores. Felix had an excellent credit rating and Oscar had a poor credit rating. Felix was given a credit card with APR of 12%. What is his monthly percentage rate? So you take your 12%, divide it by 12 months, gives you a monthly percentage rate of 1%. Oscar was given a card at 15%, so you take your 15%, divide that by 12, and gives you 1.25% monthly percentage rate. If each of them had an average daily balance of $800 and had to pay a finance charge, how much would Oscar pay? How much more would Oscar pay than Felix? Well, Oscar's rate was 1.25%, so 0.0125 times $800 daily balance gives you a $10 finance charge. For Felix, his was 1%, so 0.01 times 800 gives you a daily finance charge of $8. So $2 more for Oscar. Problem number 3. Jared's average daily balance last month was $560. The finance charge was $8.12. So here we're going to work backwards. Okay, in part C for number 2, we multiplied. Here we're going to divide. So you take your $8.12 finance charge, divided by $560, which is your daily balance, gives you 0.0145. Move it 2 places to the right to go from a decimal to a percentage, so 1.45%. APR, you take your 0.0145, multiply that by 12, gives you an APR for the whole year of 17.4%. Okay, so 2 and 3 are kind of opposites of each other, forwards versus backwards. Number 4 says see page 185, number 10, which is off to the right hand side here. Okay, you have a statement from the credit card company, okay, showing all your charges. Okay, it says Gina has a debit card. Okay, the account pays no interest. He keeps track of his purchases and debits in the debit card register. Okay, fill in the missing entries. So we start out with a balance of $778.19. Okay, payment amount. Okay, this is he bought a baseball bat for $92.19, so we're going to subtract that off. So $778.19 minus $92.19 gives you a new balance for part A of $686. Okay, we're going to use that balance now, and he bought gas for $51, so we're going to subtract off 51. 686 minus 51 gives you a new balance of 635. Okay. Part C. We had a deposit here, so that money is going into the account. So 635 plus 400, because that's the deposits coming into the account, gives you a new balance for Part C of 1,035. Part D, he bought gas again. So 1,035 minus 25 gives you 1,010 in the account for Part D. Part E, dinner at Spooner's on the Beach. He paid the bill for $71.12. So 1,010 minus $71.12 gives you a new balance of $938.88. Okay, now we're going to use that $938.88, and we're going to subtract off the books for fall semester of $491.51 for an ending balance in Part F of $447.37. Okay, so again, keep your running balance as you go. You have things that come out. This column here, that's money coming out of your account, and this column here, that's deposits, that's money coming into your account. Question 5. Jill's credit card was stolen. The thief charged $900 kayak on the card before she reported it stolen. How much of the thief's purchase is Jill responsible for? She's responsible up to $50. And again, that depends on the company and the card, but up to $50 max. Jill's average daily balance would have been $12.40 without the thief's purchase. What is the sum of her daily balance for the 30-day billing period? So 30 days times $12.40, okay, that's her average daily balance, gives you $37,200. Okay, that's the sum of her daily balances, $37,200. The thief's purchases on her daily balance for 10 out of the 30 days during the billing cycle. What is the sum of Jill's daily balance with the thief's purchases included? Okay, so here you have your $12.40, that's your daily balance, times 20 days. Okay, plus this number right here is $12.40 plus 900. Okay, it's your average daily balance of $12.40 plus the $900 kayak for 10 out of the 30 days. Okay, so that's $21.40 times 10. So again, average daily balance of $12.40 times 20 days plus $21.40, that's when the card was stolen. That's $12.40 plus 900 times the 10 days before she reported it stolen. Gives you a total daily balance of $46,200. And number 6, it is important to check your credit card bill each month. In the next lesson, you will carefully examine the credit card statement and learn how to look for errors. Most people would notice a major, expensive purchase that they did not make. A smaller, incorrect charge of, say, $6, for example, might go unnoticed unless the entire statement was checked with the calculator. If 1 million credit card holders were each overcharged $6 each month for 5 years, what would be the total amount the debitors were overcharged, not including the extra finance charges? So here we have our 1 million card holders. Okay, so 1 million card holders times $6, okay, times 12 months times 5 years gives you $360 million. So it's very important to always check your credit card statement and your bank statements to look for charges that were unauthorized or charges you didn't make. Okay, that very simple computation there, $360 million if people were overcharged and they just let it go.